My sense is we are moving in the right direction. Having said that, I think the way I look at the economy going forward, including where we are, I see it more like a marathon than a sprint. Therefore, a lot of businesses were expecting it to be a hockey stick. I don't think it's a hockey stick. It's a very gradual gradient, but up. Therefore, I'm positive on the build-up of the economy, but steadily up over time rather than a rocket.
Okay. If you were to look at the banking system as an example or as a manifestation, are you seeing that moves or steps or developments which hint at that kind of progression?
I think the banking system again is running at two speeds. We are seeing some challenges in the public sector banks because of the challenges out of the stress loans which are sitting on the balance sheets of banks. And the private sector is moving at a slightly faster pace. So the banking system is moving at two different levels of speed. And I think the system is still recovering from the historical excessive leverage which corporate India has done.
And how long do you think that could be before things sort of get eased off? And I know it's a very general question, but
my sense is you are going to see a steady move up. Therefore, it's a gradual gradient up, but moving in the positive direction.
okay. So you've talked about disproportionate financialization of the real sector. Now, this is a term which was used about 5 or 6 years ago,
Right.
when we saw the whole Wall Street collapse. Why do you use it now?
No, the reason I use it is because when economies start picking up, the temptation to give steroids to growth from the policy side is always high. And what we need to keep in mind is that when you start using those steroids, you take more and more of the real economy into the financialization. Therefore, I would much rather keep a fundamental philosophy that the role of the financial sector is to serve the real sector. And we must always guard against anything which tries to make the financial sector the master of the universe.
But is this a sort of conceptual fear, or is that a real fear when it comes to at least the Indian markets?
No, at this stage, again, to expand on that, the issue which sort of does bother me is disproportionate dependence for the capital markets on foreign portfolio savings versus domestic savings. And I think it is extremely important that we get that balance right. I think we are doing a set of things which are right, which is moving to real interest rates, so which increases the level of financial savings in the economy from money going into gold or real estate. So we need to constantly ensure that Indian savings are moving into financial savings, which could be bank deposits, insurance, mutual funds, equities, debt, but essentially making sure that the real economy is supported by domestic financial savings and not mainly depend on foreign portfolio savings.
Now, that is happening today, and I guess that's why you're sort of articulating it as a reason of concern. But what can happen or can be done to reverse it? Because this is not something new either.
Good, solid policies, and I think we're seeing that actually in play. I mean, but that starts creating the tensions. Okay, but effectively we are seeing solid policy on the ground, which I think is working. And essentially, what it means is prudent management of the fisc and the current account on the macro side, as well as keeping real interest rates reasonably positive to ensure financial savings grow.
So when it comes, I mean, on interest rates specifically, so are you expecting or hoping that things will get eased up further in a quarter or so?
My sense is we are today at a repo rate of 7.5%. I would say this calendar, I would feel that we could see 7% repo rate through 2015 calendar.
Okay. Just to come back to the banking system, and you've referred to the stressed assets problem, but do you think that this stressed asset problem, since while it may unwind, as you said, could still have an overhang which could affect a lot of the other rest of the banks in the system and perhaps create some...
No, I think the good news is 75% of the banking sector is state-owned. So there's an implicit sovereign guarantee. So I think the banking system is not at risk of systemic issues.
Except it might lose taxpayers' money.
And that's again for the history.
Yeah.
It's not something which has happened now.
Yeah.
So I think we should live with it and move on.
Right. What's your sense on capital markets themselves? I mean, are you seeing any new sort of factors weighing in when it comes to the way things are moving?
I think capital markets work with head and heart. For the last 10 months, they worked more with the heart. I think now they are now beginning to work with the head.
Okay.
So markets are saying, hey, we went with the heart, but where are the earnings?
Yeah.
So suddenly the mind is coming into play beyond the heart.
Yeah.
So and markets are beginning to ask the questions on earnings, which is why you're seeing some corrections in the marketplace.
Right, and that's really a sort of, let me make that the last question as well. And there is concern about earnings, right? And manufacturing has slipped, demand is not showing any immediate signs of revival, though generally there is a sense of optimism.
Yeah, and I think you also got to keep one thing in mind. The rupee as a currency has appreciated against every other currency other than the dollar.
Yes.
So that again starts affecting export demand and makes imports cheaper. So there is a external pressure from the global side as well, which is putting pressure on domestic earnings.
So if corporate India is continuing to be under stress and will be under stress, either because of the fact that it's over leveraged or because of demand and market condition issues, is this also going to put stress on the way it functions, the governance, issues that you pointed out?
One of the reasons why you're not seeing the investment cycle pick up in a hurry is because of these factors. But I am still of the view that the underlying position of the Indian economy is a gradual move up. Therefore, I'm not of the view that we're going to see any downward trend. But the pace of movement up is going to be very gradual, as the fact will remain for a while that investment from private sector is behind the curve.
Right. Last question. As Kotak Bank, I mean, we are in a context where we are talking about the growth net and many sort of other emerging economies. Do you see yourself expanding outside and?
No, right now, as you know, we are in the middle of working towards completing our merger with ING Vysya Bank, and that makes us a significantly more scaled up bank. We see the Indian opportunity as huge, and if we look at international opportunity, it's some time away, and that too with countries or economies where we think we can add value rather than being just another bank.
Okay, Mr. Kotak, thank you so much for speaking with us.